Okay, so today we're diving into some pretty significant movements in the U.S. stock market.
Yeah.
And, like everybody's kind of wondering what's going on, what's shaking things up. A lot of fingers seem to be pointing towards, the current administration's policies, particularly their stance on tariffs.
Yeah.
So we've got this article here, and it's titled, Stock Sell-Off Worsens as Wall Street Wonders How Much Pain Trump Will Accept for the Economy. Really lays it all out there.
Yeah.
So I guess our mission today is to figure out what's really driving this downturn, based on what this analysis is telling us.
Right.
And then kind of what are the potential ripple effects that we need to keep an eye on for the economy as a whole?
Yeah, definitely a lot to unpack there.
Definitely.
I mean, this article does a really good job of kind of capturing the initial reactions in the market, right?
Yeah.
We're seeing some pretty substantial declines across the board.
Yep.
Looking at the major indices. So just to give you an idea of the scale here, the S&P 500 dropped by 2.7%.
Wow.
Which puts its total decline from that peak it hit just last month at almost 9%.
Oh, wow.
And then you've got the Dow Jones Industrial Average, which fell by 890 points.
Okay.
Or if you prefer looking at the percentage, that's about 2.1%.
Yeah.
And then the NASDAQ composite saw the biggest hit, skidding by a full 4%.
Oh, wow.
But I think what's really striking is just how quickly this all happened.
Yeah.
The article points out that at one point during the day, the S&P 500 was down by as much as 3.6%.
Oh, gosh.
And to put that into perspective for you, that would have been its worst day since all the way back in 2022.
Wow.
Which, as you might remember, was a time when everyone was super worried about inflation.
Oh, yeah.
So, it makes you think.
Yeah, that comparison to 2022 really does make you kind of sit up and pay attention.
Right.
And it sounds like the immediate catalyst for this downturn is the uncertainty around President Trump's policies.
Yeah. I know.
You know what I mean?
Wall Street's basically trying to figure out just how much economic disruption the administration's willing to tolerate as they pursue their goals, particularly when it comes to these tariffs.
Yeah, and the article really highlights this kind of back and forth, this volatility. The S&P 500 swinging by more than 1%, either up or down, 7 times in just 8 trading days.
Daisy.
All because of these tariffs that just seem to be constantly changing.
It's a roller coaster.
It is. That kind of volatility has got to make investors nervous, right?
Absolutely. That level of uncertainty is not good for anyone, really.
Yeah.
If we kind of zoom out and look at the bigger picture, this kind of instability can have a real impact on the economy as a whole.
Oh, yeah, for sure.
Businesses need some degree of predictability to function.
Right.
If the rules are constantly changing, it becomes way harder for them to make long-term investments, plan for growth. Even consumers might hold back on big purchases if they're not sure what the future holds.
Makes sense.
And, the article touches on this too. There's this worry that this ongoing uncertainty could really just paralyze economic activity.
Yeah, and it's not just about looking ahead with, anxiety, right?
Yeah.
The article also points to some indicators that the economy might already be slowing down a bit.
Yeah, some warning signs for sure.
We're seeing surveys that show a lot of pessimism from both businesses and consumers. And even the Atlanta Federal Reserve Bank's real-time indicators are suggesting that the U.S. economy could actually be shrinking.
Yeah.
That's a pretty serious signal.
It is. Those real-time indicators are meant to give us a super up-to-date snapshot of what's happening in the economy.
Yeah.
So any hint of contraction, we got to take that seriously.
Yeah.
But to get the full picture, it's important to understand the White House's perspective on this too.
Right.
So the article includes President Trump's response to these recession concerns from an interview he did on Fox News. And he described it as a, period of transition with the goal of bringing wealth back to America. But, he did acknowledge that this process takes a little time.
Yeah.
And he also reiterated the administration's, main goals with the tariffs, which is to bring manufacturing jobs back to the U.S.
Yeah.
So, that's their perspective.
Yeah, we're also getting some insight into the thinking of Treasury Secretary Scott Bessent, who's talking about a potential economic detox from government spending.
Right.
So it seems like there's this strategy in place to limit federal spending, reduce the federal workforce, and even increase deportations.
Yeah.
Which the article notes could have some pretty big implications for the job market.
Right. Could shake things up.
So it's a pretty multifaceted approach.
Definitely.
But if we kind of step back and look at the broader economic data, beyond just these forward-looking indicators, the picture seems a little bit mixed. Like, the job market's still pretty stable, according to the article. And the economy actually ended last year with some decent growth.
Yeah, not bad.
But, and this is a big but,
Yeah.
economists are starting to revise their growth forecasts downwards for this year.
Interesting.
So that suggests that the momentum we saw earlier might be fading.
Right, particularly.
And then you've got the analysts who are watching all of this super closely.
Right, the experts.
Like David Miracle over at Goldman Sachs.
Yeah.
He actually lowered his forecast for U.S. economic growth at the end of 2025 from 2.2% down to 1.7%.
Okay, significant drop.
It's pretty significant, and he specifically cited these larger-than-anticipated tariffs as the main reason for that change.
Makes sense.
So it's a clear example of how these policies are directly affecting expectations for the future.
Yeah, that's a direct link.
And Miracle even put a number on the risk of a recession.
Oh, wow.
He estimates about a 1 in 5 chance of it happening within the next year.
Okay, so not insignificant.
Not insignificant, but he did add that the White House could adjust its policies
Right.
if those economic risks start to look too scary.
So there's still some wiggle room.
Yeah, exactly.
Oh, yeah.
So we're not totally locked into any one path yet.
Yeah.
Then you've got Chris Larkin from E-Trade, and he makes a pretty bold statement.
Oh, yeah.
He says he believes that almost all of the forces influencing the market right now are secondary to these tariffs.
Wow, so he's putting a lot of weight on those tariffs.
Yeah, it really shows you how much power those policies have in shaping how investors feel about things.
Yep, for sure.
And it's not just like the overall market that's taking a hit.
Right.
The article also highlights some pretty big struggles in specific sectors and with some big-name companies.
Oh, yeah, like who?
Like big tech stocks and companies in the AI space have seen some pretty sharp declines.
I see.
NVIDIA, for example, which has been doing really well recently.
Yeah.
They've fallen by over 20% just this year.
Oh, wow.
That's a pretty big reversal.
Definitely.
And then there's Tesla. They're down a whopping 45% year to date,
Oof.
including a 15.4% drop on Monday alone.
Yeah, that's rough.
The article suggests that some of this might be tied to, the company's association with Elon Musk.
Yeah, makes sense.
And even some protests that have been happening because of government policies affecting Tesla dealerships.
Oh, wow. So it's like a whole web of things.
It is. It really shows you how all these different factors can come together and impact a company's stock performance.
Yeah, it's never just one thing.
Exactly. And it's not just those like high growth tech companies that are struggling.
Right.
Companies that are more dependent on consumer spending are also taking a hit.
Oh, yeah, makes sense.
Like Carnival Cruise Lines and United Airlines, which makes sense if people are starting to worry about their finances and the overall economy.
Yeah.
If you're not feeling confident, you're probably not going to book that big vacation.
But you're going to hold back on those extras.
Exactly.
Yeah. And this kind of move towards safer investments, it's often called risk-off sentiment. It's not just happening in the stock market.
Interesting.
The article points out that even investments that were super hot before, like Bitcoin, they've taken a tumble too.
Oh, wow.
So it seems like investors are looking for safer places to put their money.
Uh-huh.
And that's why we're seeing increased demand for U.S. Treasury bonds.
Okay.
That demand drives the prices up and causes yields to go down.
I see.
It's a pretty big shift in the bond market.
Yeah.
The article even mentions that the 10-year Treasury yield has been declining since January.
Oh, wow.
So it seems like safety is the priority right now,
Gotcha.
even if it means accepting lower returns.
So even with all this uncertainty hanging over everything, the article says that deal-making hasn't totally stopped on Wall Street.
Oh, really?
So we saw Redfin's stock price go up after Rocket announced they were going to buy them. But then Rocket's stock price went down afterwards.
Interesting.
And then ServiceNow bought this AI assistant company called MoveWorks.
I see.
And their stock price also went down after that.
Yeah. So even good news isn't necessarily translating into positive stock movements.
It seems like it. So maybe the market's just reacting more cautiously than usual.
Yeah, makes sense.
But it just shows you that specific news can still move stocks even when the overall market is down.
Definitely. It's a reminder that there are always these individual stories playing out.
Right.
Even within a broader trend.
Okay, so to give you a quick snapshot of how the market closed that Monday, the S&P 500 ended at 5,614.56.
Okay.
The Dow Jones Industrial Average closed at 41,911.71.
Got it.
And the NASDAQ Composite finished at 17,468.32.
Okay.
So, all significantly lower than where they started.
Right, a rough day.
And if we look beyond the U.S.,
Yeah.
the article says that European markets mostly followed our lead and went down too, while Asia had a bit more of a mixed performance.
Okay.
But both the Hong Kong and Shanghai stock indexes declined after China reported a drop in consumer prices, which was their first drop in 13 months.
Oh, wow. So that's a pretty big deal.
Yeah. And it signals some economic weakness over there too.
So it's not just a U.S. problem.
It seems like it really shows how interconnected the global economy is.
Yeah, for sure. One country's problems can quickly become everyone's problems.
No. So as we kind of wrap up this deep dive, the main takeaway here is that this sell-off in the stock market seems to be mostly driven by worries about President Trump's economic policies.
Right.
Especially those tariffs.
Yeah.
And all the uncertainty they're creating about the future of the economy.
Makes sense.
And, this is all happening at a time when there are some signs that the economy might be slowing down.
Yeah.
Even though the job market's still looking pretty good.
Right. So it's a bit of a confusing picture.
Yeah, it is. We've got this situation where the labor market is still strong, but people are getting more pessimistic and growth forecasts are being lowered.
Right.
So it's not totally clear what's going to happen next.
No, it's a lot of mixed signals.
And investors are definitely reacting to that.
Yeah, they don't like uncertainty.
So as we end this deep dive, here's a final thought for you.
Okay.
Given all of this, the uncertainty, the market reactions, and the mixed signals from the economy, what do you think the long-term consequences could be for both investors and the economy as a whole if these policies continue in this direction?
Right.
And what specific economic indicators should we be watching really closely as this all unfolds?
That's a great question. Definitely something to think about.
It is. It's going to be interesting to see what happens next.
For sure.
Thanks for joining me for this deep dive.
Of course, it's been a pleasure.
It's been great having you.
Likewise.
See you next time.
See you, bud.
Bye.